Well, I like to term it right now, and I think you see it on a number of the websites, King Dollar. In our day, we used to say buy dollars and wear diamonds.
That wasn't weird.
I don't know about the value of a diamond anymore. But, um, Fred, we're in a very unique situation where it's not so much what the United States wants on the dollar, it's where else do you go? Europe has yet to really get their hands around their problem. And you've got an ECB that, on a slight uptick in its inflation number, is mandated to fight inflation. Meanwhile, their economy is crumbling. Whether you want to say that Europe's in a recession or that Germany's in a recession, okay, they grew at point 0.2 or they grow at point 0.4. But the fact is that I don't really think a sub 1% GDP growth over a two-year period is going to foster a good growing economic environment. And now you've got the UK following suit very quickly with their recent budget. And you can see the political polls already swinging dramatically against the UK. And then throw in Asia. The bright spot in Asia, perhaps, is that Japan is beginning to come out and could
Only
surprise the
taken
markets.
35 years. Hey, everybody, welcome to Markets and Madness. This is the place where we try and discuss where politics, economics, and personalities go in different directions. So we got us with us today, Steve Flanagan, ex-EFX Director, Risk Manager from JP Morgan. Steve, thanks for coming on. Tim's here as well. But Steve, why don't you introduce yourself again? I know you've been here a few times, but for the people that are new.
Sure thing, Fred. And good morning, Tim. I was e-commerce global FX risk manager for JP Morgan when I retired in 22. And, since then I've kind of taken on a Forex educator type role. I do a bunch of podcasts here and there, and love joining you guys and talking. Fred, and you and I have so many memories that go back
Oh,
on the
geez.
night desk at J.P. Morgan Chase.
We go back to 1985 at
Yes.
Manhan, right? Remember those days when the numbers would come out? Artie, what do I do? Everybody buy. And then he would look at Carmine and say, you sell, you're doing sterling.
Oh boy. Yeah, I wish it was so simple today,
Right,
but
exactly.
Steve, I used to do what they call the junior forex, the
yes,
seminars for the industries,
right.
and I would set up the room in a way where I would control the liquidity in the room. I'd have guys in the pit, and I'd have corporates. We'd wear a corporate badge, and I would measure the liquidity in the room and put them over their limits. And they
Hmm.
didn't realize it, and it was really orchestrated in a way where there was no way that these trading banks could lose and could win in the trading sessions. I'd
Right.
push the dollar down. I'd get them 3 times over their limits by flooding them with liquidity, and they wouldn't realize it because they'd have mistakes
Yep.
in the back office. And I remember one guy called Freddie. Freddie was out one Friday, and he said, "What happened?" The guy said, "It was just like the junior forex, when everybody was caught over their limits."
Everybody over the limits.
Yeah.
Funny you say that, Tim, because I picked up something 2 years ago with the ACI, and I've been picking up right in your footsteps and moderating the trading simulation that they have, the same
Oh,
type
no
of thing.
kidding. Yeah.
Yep, and I've thoroughly enjoyed it. But you watch the young kids today, and understanding risk in an electronic world is a completely different because it happens so quickly.
Yep, that's so true.
Yep.
So, Steve, your background has certainly been the dollar and everything associated with it. I know the last couple of times we've had you on, you've been very bullish on the dollar, where I've been on the other side. I
Yep.
thought that the Trump administration would begin to talk the dollar down, but I've certainly been wrong, and you've certainly been right. We had Alex Jaya on yesterday from Catalyst Futures, hedge
Yes,
fund
I saw
manager out of
that.
London, And he
Yep.
says first time in a while he's seen Eurodollar strikes 99.50 as 20 deltas for 1 month. So it looks like the market is anticipating the break of the buck. What are your thoughts?
Well, I like to term it right now, and I think you see it on a number of the websites, King Dollar. In our day, we used to say buy dollars and wear diamonds.
$5 a wear
I don't know
diamond.
about the value of a diamond anymore. But, um, Fred, we're in a very unique situation where it's not so much what the United States wants on the dollar, it's where else do you go? Europe has yet to really get their hands around their problem. And you've got an ECB that, on a slight uptick in its inflation number, is mandated to fight inflation. Meanwhile, their economy is crumbling. Whether you want to say that Europe's in a recession or that Germany's in a recession, okay, they grew at point 0.2 or they grow at point 0.4. But the fact is that I don't really think a sub 1% GDP growth over a two-year period is going to foster a good growing economic environment. And now you've got the UK following suit very quickly with their recent budget. And you can see the political polls already swinging dramatically against the UK. And then throw in Asia. The bright spot in Asia, perhaps, is that Japan is beginning to come out and could
It's only
surprise the
taken
markets.
35 years.
Yeah, exactly. And China is falling into the same doldrums that Japan went through, and they're now faced with perhaps a deflationary environment. So it's dollar by default, especially when you've got close to 3% growth and you've got a 5% 10-year yield. Where else are you going to go? Now throw in your AI and your machine learning and all these data centers. Where else can you go in the world for growth? Look at, you've got SoftBank pledging 100 billion plus. You've got the guy from Dubai coming in pledging up to 20 billion in data center money. So it's really by default the dollar is moving, and I'm not sure where I want to put a top on it here with the, dollar index now breaking to these levels, which primarily is the euro dollar. I think euro dollar definitely, Fred, is targeting in here a 100 parity, but I think you want to start looking at perhaps 85 and lower for the euro dollar over a period of time if we don't see changes in Europe.
Yeah, as somebody wrote yesterday, I read the dollar is the cleanest shirt in the dirty shirt pile. you know,
That's
and,
that's yeah, perfect.
and Tim,
Well,
you've said it
that's,
all
that's,
along. It's capital flows, right?
I don't know that the shirt's dirty at all. You know, all the we got a diverse audience here. We got some people that live minute to minute, kind of day trader types, and we've got sort of macro long term investors. And one thing I learned, we all learned it the hard way probably, is are you trading short term focus or long term focus? And this is one of those times where short and long term focus is emerging.
Yes.
The focus used to be the Fed and what's the Fed going to do, and the bond vigilantes have told the Fed, you really don't know what the hell you're doing.
Right.
Right? You drop rates 100 basis points. We're taking rates up 100 basis points just to show you. So I think if the Fed decides to buck the trend, the market's just going to shrug its shoulders and shake its head and say, I can't believe they're stupid enough to do this. But you've got long-term and short-term capital flows, to your point, into the U.S. And for me, the most important four words in my trading room was when you'd pick the phone, you'd call somebody like you or a friend, and you'd say, "What do you think?"
Yeah.
And what is the market thinking? We can all look at GDP and all of these things, but I think the market's looking at Inauguration Day and a big change in world policy under Trump. So that's both short and long term. And I don't think you can fight the capital inflows here. to your point. They're buying them
Hmm.
because you can get a yield on a 10-year, which is attractive. So the governments are looking at that. And you see Musk looking to trim the budget, and what happens there. So maybe inflationary expectations are going to dampen a little bit. We've already taken the yield curve up to respond to that. So I think here is one of those unique times where both short and long-term flows are arguing for a stronger dollar.
In yesterday's conversation with Alex, we talked about what I refer to as the twist in the yield curve, where the front is down and the back is up. And normally, when you have a yield curve move, you'll see the front go up by 10 basis points and the back go up by 30 basis points, and that creates the steepening. Well, this is steepening the other way. And doesn't that signal a problem within the economy? The fact that we're going to have 5% yields now, I don't know what mortgages are. They must be back to 7%. That's going to
Yes.
slow down the housing market. That's going to create more problems down the road. And as we talked about, Tim, you and I, a while back about, Trump's a builder and he's going to renovate the house. I still think, they're going to turn the heat off for a while and they're going to have to knock down some walls and have to replace the windows. And then the house is going to look pretty a year and a half from now. But I think we have to get through that point. Reagan had the same problem too when he was elected. And now I'm talking about equity markets and the dollar, I guess, to a certain extent too. They both had that sell off initially. And then when the policies started to meet fruition, but maybe you're right. Maybe now with the rest of the world in such a dire state, maybe this is the best place to be.
There's no alternative right now. Where back in our day, with the examples you just said, there was always, okay, well, then I'll go to UK or I'll go into Europe. But right now, the alternatives are slim pickings.
The
I think
alternatives are
Japan.
gold, Bitcoin.
Yes,
You
yes.
know, they're not the traditional currencies that you and I grew up with. When
But
we talked about the other day about negative interest rates in Swiss, and people were buying Swiss francs like
and
there was no
buying
tomorrow,
Swiss, yeah.
right?
Yeah. I mean, I think that a lot of the rules that a lot of us learned in our day are tech somewhat. You have to throw them out the window. It's a whole new environment.
Mhm.
I think that if they approach the deficit very quickly on. And let me just emphasize that I think this next 3 months is going to be volatile. I think you could have up moves and down moves. I think you could have quickly sentiment swing negative on just what we're saying. Trump is blowing all the windows out and it's freezing, so it's going to get cold. But I think that if we begin to see some sort of forward guidance from your government, which the central banks have totally lost. But if the government suddenly starts addressing the deficit and the budgets, I think that that could be a big positive in correcting the bond vigilantes that are
Agree. Yeah.
basically going opposite directions. I think that the bond market's in for a very rough ride because I think that they've pushed it to the opposite side. But back to the capital flows that Tim talked about, we've talked about the AI over the last, 2 years, and that's fed this market. But now we're all of a sudden moving the subject from AI into data centers and the building of all these data centers and all the high performance computers that are required to go into these data centers. I mean, look, you saw Applied Digital today get a massive funding from Macquarie Bank to build these high performance data centers. So, this subject today, the topic of AI and machine learning, it's only just really begun, and it's quickly morphing into all these other groups, and to the point they're all in the U.S.
So are
The
you
most
saying that the way housing used to drive the economy, you think AI and computer data centers are going to drive the economy?
That's where the investment is going in the shorter term, Fred. In the bigger picture, housing has been weak, I think, for some time. Prices are up. I mean, there's a meeting of the minds that's going to happen there. Perhaps we go sideways as we are doing, and there is some weakness there. But that's just another, kernel in a nut that's waiting to be opened again and provide even additional growth. I don't know. When I look at the big hedge funds and they're all buying real estate, I got to wonder how long real estate stays down for.
Yeah, they're buying. We're seeing building all over. As I said, we drive down to South Carolina, and you drive along 95, and you see along the highways these huge um, condos, apartments, luxury apartments. We always joke about luxury apartments being
Y-
built,
Yeah,
and they're all over the place. So these, 150 unit complexes are being built, 200 unit complexes, where they used to build 10 houses. Now they're building these, 10 buildings that can fit, 40
Let me
people in.
throw a couple of points out here, which might stimulate some conversation. In some ways, I feel like I'm in the turn of the 19th to 20th century,
mm,
where we're looking at innovations in steel, and Rockefeller's pumping oil, and Carnegie is building railroads, and we're seeing a convergence of technologies driven in large part by the points you made, Steve. So just take a sector like the health sector. All of a sudden now, we've unraveled the DNA code, and now you've got computers that are actually going to be able to do something about it. There's a couple of quantum computers online already, where you could, instead of having a 10-year laboratory testing of a drug, you create a million synthetic labs, and in 20 minutes,
yeah.
you've done what you used to do in 5 years. Um, I don't I don't think in our lifetimes we've seen such a convergence
Yeah.
in technology. And you point out that it's centered in the United States. And I think that is in large part what's driving or what's going to drive this focus. If you've got a 2 year to 5 year time frame. 2 weeks ago, some guy, I don't know, it was Palatine or some CEO, said that quantum computers are 10 years away. And I asked the guy who was the founder of Cray Computers whether or not he realized that. He belongs to a group I belong to.
Hmm.
His name is John Rollwagon. And I said, John, what do you think of that statement? And he said, I think he's dead wrong. I think we're probably 3 to 4 years away from quantum computers really taking over. That's in the realm of short-term investments,
Yeah.
for industry. Well, those kinds of innovations are going to suck capital away from everybody, and have long-reaching ramifications to everything. Add that to changes in demographics. You know, if you're thinking like an investor as opposed to a trader, the change in demographics can't be overlooked. You got the baby boomers are old now. Uh, I'm a baby boomer, and you got baby boomers have retired 5 years ago, and we thought we'd take a lot out of GDP for that. Not happening. You're seeing technology enabling migration from the north to the south in the United States. You're going to move to Florida. I'm in Florida. Freddie's got a place in South Carolina. Even the rats are leaving New York. I see them. I see them with little easy passes stuck to their fur
Yep.
on I-95. So these are huge changes that we're dealing with here, and I think the markets are inundated with this. We don't know which way to look.
Tim, just to add one point to before you continue on, when you said that the this technology is going to suck in all the capital, at the same time, perhaps, at least what we're hearing, is that the Trump administration is looking to take a smaller slice of that available pool of capital.
Hmm.
So you could end up with a smaller or somewhat, let's just say it's not growing as exponentially as it has been. The government taking smaller slice of liquidity out of the market, that leaves so much more liquidity for exactly what you're talking about.
Capital investment and
Yeah.
Yeah, and
it's the
reducing
big move is
barriers too,
public
reducing
sector to
entry
private
barriers.
sector. Freddie
Yep.
and I have talked about this several times.
Yep.
We have to adjust to a smaller public sector and a growing private sector, and there's going to be capital available for private sector by virtue of the tax cuts.
Exactly.
Yeah,
Which is a big positive.
and hopefully the new administration will reduce entry barriers to get into these areas and cut down the red tape that it's going to take to do that. That's been a
Yeah, so I
problem for
mean,
the
we
last
could be
20 years.
sitting at a point in time just like our grandparents, post World War I, where I talked to a guy about quantum computing, and he said, yeah, it's a little bit off. Okay, so 3, 5, 10 years, whatever. He said, but think of it this way: back in your grandparents' day, they had the biplanes flying around. He goes, think of quantum computing as an F-35 Raptor. That's the difference in computing type, and I got to think that all of these things converging, along with you know artificial intelligence, decision making. I read the article from Sam Altman on Bloomberg this week, and he said, in looking over all the data from their artificial intelligence that they have developed, he said the number one request that they've looked from people using the platform is medical. Asking questions. And people have actually said, wow, the computer really helped me. It gave me an answer. I was able to talk to my doctor and really get, some excellent resources put at my ailment. So think about that whole avenue of computing that could, go where
Yeah,
people,
potential.
yeah, I mean, you keep seeing these, you know, watches from Apple that, and then they show you all the health benefits, that you have on your wrist that's, diagnosing your entire body real time. I can only see this growth continuing, and wow, what a world we're walking into.
The other day we did a chat with Alex Jahedi about digital currencies, and Tim, you made the point. Feel like I'm on the Pony Express and somebody's introducing email to me.
That's
you
a
know,
good one.
that's where I guess where we are on a number of different fronts. Technology really
Yeah,
is.
and I think that's the key point. This convergence is giving us exponential spurts throughout. One industry just piggybacks on top of another, and we're seeing. Now you've got so many things. This is, I the two books that influenced me the most in my lifetime was Future Shock and The Third Wave. I thought Toffler had it all together 50 years ago,
Mm.
and it's played out so many times. And I almost weekly I look back at those scenarios and I see the difference. I had a conversation with a woman the other day about she made a statement. She said Swift is going to be overtaken by tokens. And I said, well, let's talk about counterparty risk and the elimination of counterparty risk, something that's you're very familiar with, I'm sure, Steve.
Oh, absolutely.
She didn't know what counterparty risk was, and
Yeah.
she wasn't really interested in learning. It was just, and it struck me that I, as a senior citizen, was talking to somebody from a different civilization, not just a different generation, just a whole different civilization. The kind of things that we wrestled with, which were really big events, have been resolved in many cases by technological advances. And that's moving at an exponential spurt. I can't even imagine what my grandkids are going to think about the kind of things that we wrestled with as major factors.
Underscoring your platform here, guys, and how vital and interesting it is to so many viewers. I can only imagine that this is going to grow, but it's the wisdom that you're bringing. Counterparty risk, and someone says, "What's that?" And you're like, "Well, let's sit down and talk about this before you guys go any further."
Yeah, I talked about performance risk, counterparty. She thought I was talking about Viagra. I said, no, no, not that kind of performance. No, no.
Yeah.
Yeah, on the very localized level, when we had snow markets back in the FX markets way back when, or Met wins or Yankee wins, and somebody failed. Somebody says,
Oh, yeah.
I owe you $5,000, I can't pay you. Well, wait a minute, I owe him three, I can't pay him. And he owes somebody else 1,200, he can't pay him. And then one
Yeah.
one break in the link in the chain link, and the whole system goes down.
Right.
Yeah. Well,
Yep.
that's been addressed. I think.
Yeah.
And I raised a point about Herstad risk the other day. Uh, and that's a footnote to history now. When you think of how big that was, uh, it took 10 years to resolve for all the payments to get cleared up on that. And that was a simple, you know, daylight
Mhm.
risk. It's 3 a.m.
Right.
in Germany, and the marks come in, and the dollars didn't go out. Uh,
Right. But I think you hit on a very important point, and that's the speed at which things are changing, the exponential growth. I try to highlight this to the people in the retail market that I talk to. I said, okay, well, here's what I want you to do. I want you to look at the payroll release at 8:30, and I want you to look at the 1 minute of prices right after it. How can something come out just above expectations and look at the resulting move you get? Because everything changes within milliseconds, if not microseconds today. How are you as a human being going to keep up with that change?
right.
So you've got to adapt a little bit broader view, and not try to get taken in and inundated or polluted by the instantaneous nature of the adjustments today. Step back, and I think that you can really see a very good view if you just let it breathe for a few minutes.
Well,
Yeah.
these
So
markets, I'm sorry, Fred, go ahead.
no, good, good.
These markets have moved from a change in the weather to a change in the climate
Yeah,
immediately.
yeah.
I remember I was trading during the flash crash. This had to be around '08, I guess, or '07, when Greece was a problem. And I was watching CNBC on the computer in the trading room, and somebody threw a Molotov cocktail, and all of a sudden, two or three stocks got hit, and the whole S&P collapsed, and all the computers just went after one another, and we had a flash crash,
Hmm.
and all of a sudden we had a 4%, 5% move in a matter of seconds, and then that vulnerability is out there today because these markets are so intertwined.
Oh boy, yeah. Well, now you're touching on a point near and dear to me, Tim.
Yeah, I'm
You've lived
sure.
through it.
Yeah, you of
Yeah.
all, I guess.
Yeah.
Yeah,
I mean, you could have one of these moves. We all know what SNB, what happened there. And, you could have one of these moves easily in the markets today, but it could be on a more sinister role where, market data that everybody relies upon, right? Because that's what feeds all the models that trade today. And if the market data was ever hacked through a third source and then came into the marketplace, machinery is forced to react. It can't sit and go, wait, that's not true. How could that be? No. The moment a price trades, it becomes true. Whether it gets denied in 1 minute or not, it's
yeah,
true to the machine.
very good point.
So
Um,
that is a risk out in the marketplace. And, Tim, they may wheel us out and start asking you questions. What was that counterparty risk you talked about?
Yeah, well,
And
I wouldn't be surprised at that. Go ahead, Frank.
Steve, you talked about what happens on payroll day, and you get those 1 minute bars. And I remember on retail FX, you would get some of these more shady brokers that would push people into a position. So they tell Steve, it's going up by limit long. Tell your friends, put everything you have in a number. Tell Tim it's going down, put limit long. And then what happened was everybody goes limit long, and the spread goes from, 1 pip wide to 30 pips wide, and everybody gets liquidated. And
Yep.
nothing happened. And then the spread comes back to 1 pip wide. It's like, sorry, because we base your reval, the longs, we base it off the bid side, the shorts, we base it off the offer side, and all it has to do is widen, and
Yep.
everybody gets liquidated.
You just stimulated a thought process for me. We've been living with bullshit numbers for 4 years now. The
Economic numbers.
administration has changed, has distorted this picture, and I think if you can rub away some of the fog and look at it clearly, I think what we're going to find is that this labor market has really become a function of government employment
That's so true.
And now I'm not sure really any of the numbers. The revisions are going to be bigger than anybody can imagine, I think. And what's the market reaction to that? When
Well,
somebody announces that that 2% growth you thought we were actually in a contraction.
yeah. I mean, the last revision they made, right, was about 6 months ago.
The 800,000.
They wiped out, what, 880,000 jobs that were created that were statistically, um, by the BLS, they make those assumptions every month. And that's why I try to tell people, don't focus on the headline. Okay, you've got to react to the headline number, but look at the U6 because that is a better indicator
Yeah,
of
to the extent that
capturing.
we can believe that,
Yeah.
they should change BLS and pull the L out and make it BS because that's really what we're seeing here.
Yeah, so true. But I mean that the U6 is, I think it's still above, well above 7%. So, when people say, "Oh, the economy, unemployment is at historic," you're like, wait, let's look at the overall picture. We're still 7% unemployment. So that's not a bad spot, but ease up on your enthusiasm.
And what's going to happen when we reduce, government employment? If Musk and Vivek do what they say they're going to do, and Trump allows them to do, what's going to happen when they cut government employment down by 20%, 30%,
The
40%?
private sector is going to do it with a third of the amount of people, I
Yeah,
think.
in 6 to 9 months. It's not going to be immediate. So you're going to have people.
Oh, I don't know
Uh,
about that.
I don't think it's going to be as quick as you think. That's my fear. I think this, when we talk about Trump renovating the house, I think that's part of the renovation process. And
Oh,
that's
no
where I
doubt.
think if the boat is loaded, whether it be long stocks limit, long dollar limit, I think there could be some adjustments. And
I
then it's
think
an opportunity.
you guys have just nailed the marketplace today. Fred, you're a little concerned about the changes. Tim, you think it's going to happen quickly? I mean, this is exactly why our markets are doing what they're doing. And I think that between now and May, this is what's going to happen. We're going to be back and forth, oh, that's going to create unemployment. I think when they cut the government workforce, Fred, I honestly think that maybe the first 10%, 15%, it doesn't even get noticed because that's how bloated it's probably, been. I mean, anybody who's gone to motor vehicle or the post office, could probably attest to that.
Well,
You know
it's
what this reminds me of? Back, I'm going back to the Volcker days now, when we started to focus on the price of money versus the quantity of money. Money supply became a big issue.
Right.
And all of a sudden we had to stop and think, hey, what the hell is money? Because you had M1, M1A, M2, M3, our checking accounts money, and how much of the money supply is hidden inside Bitcoin and gold? We don't even know what money is anymore.
That's right.
And we got a Fed that's probably paying a lot of attention to this, but not communicating whatever they're knowing to the street and the market. So we're all walking in space here. We don't know where the hell we are. And we're looking and grasping for reality inside the numbers, but we really don't know. We all trade money in some fashion or other, either the price or the cost of money. I mean, either the interest rate side or the capital gains associated with exchange rates movements and Bitcoin movements and so forth, commodity markets. So as we start to look at this, I'm making an argument here that we don't know what money is and we can't track it. What we used to look at to track money is not valid anymore. What do you
Which
guys think?
underscores the whole move behind the digital currency, because that's what the ultimate goal of a globalist is, to control the money. Because if you can control the money, your taxation is controlled, blah, 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 right down the line. And I think that could be a situation that exists, but not, I don't see it in the time frame that we're talking about here. That could be a 2030, you know, um, thing that happens as a result of maybe this boom that's going on right now. But
Well, let me ask you, have you seen an estimate of the size of the money supply hidden inside the crypto markets?
no, I have not.
I don't think anybody's ever raised that. Even everything I read, look at, nobody's talked about that. And it's a major league issue. It's as big as what we had to do in the 80s to define money supply.
But I think we
Right.
know what the quantity of Bitcoin is, and then we can calculate what
Crypto,
the
not
cost is.
Bitcoin. Crypto.
Well, I
These
think you
tokens
can.
are flying all over the place here.
Yeah.
And do we know what the quantity of crypto is in terms of US dollars?
An
Um,
interesting, yeah.
I think the major ones we can. The minor coins, what they refer to as shit
Well,
coins.
nobody's talking about it. If they all look, maybe the Fed's looking at it, maybe central banks are looking at it.
I don't think our Fed, and I don't want to bash, but I can't help but not bash the Fed because I think that they are so based on looking at these models that they've worked on for so many years. And I'd honestly throw out the models because ever since 2020, if not 2008, but 2020 in particular with COVID, things have just changed. The amount of money that the central banks and the governments have added to this economy has never been done before. I mean, how much money has quantitative easing added? Has all the fiscal stimulus added? Since 2008, my research says over $50 trillion have been added.
Wow.
You know? So
It's
when we talk
staggering.
about inflation and things, I'm like, well, they let the genie out of the bottle. Guys like us who can go back to Paul Volcker when Volcker said we're going to beat inflation and raised interest rates up to 18.5%, the
Well, what he
discount.
more accurately, I think, not to interrupt you here, but more accurately, he said, "I'm not going to pay any attention to interest rates. I'm going to
Yeah,
shrink the money supply, and
correct.
rates as a result of that will go up and eclipse the rate of inflation." Which is,
Right.
sorry,
But
Stephen.
I don't think that they have any clue the genie that they've let out of the bottle. And I prefaced that by saying I watched Janet Yellen last week, and she said maybe the stimulus helped cause some of this inflation. Maybe. Now, Janet Yellen, you ran the Fed for how many years? And now you're running the Treasury Department. If you can't give me a definitive answer, then who is got? What the heck are they looking at?
Yeah, I don't know whether she's Mo, Larry, or Curly. Uh, it's staggering. I keep going back to Future Shock, and when I read that book in the '70s, he said something that I wrote down because it struck me so well. He was talking about this craze for nostalgia, which started, in the '70s. You're watching a '50s show and that kind of thing,
Right.
and everybody, started playing rock and roll again. And he said, we have this train moving at thousands of miles an hour, and nobody knows who, if anybody, is at the controls. And society is in the caboose looking backwards. And
Yeah.
and boy, we are in that point right now.
Yeah.
Oh boy. Not a
Steve,
good place to be in the
How do you make
caboose.
sense of that?
you bring up inflation. Do you think that there's any chance they can get inflation under control? If not, are we going to continue to see these long rates higher and higher and higher still?
I think, Fred, I'll ask the question: who came up with 2% as some sort of magic number? Where did they come up with that? Right? I
It's with
mean,
the 6 feet for COVID. It's
yeah. I
it's the
mean,
same guy.
2%. Well, what about 2.8? Is 2.8 within the realm? I mean, it's not 9%, but is 2.8 close enough to 2? This is why I'm so like bad on all the central banks. Like, guys, you're at 2.6. What's the big deal?
An economist will tell you that it's based on population growth. As population grows, the rate of inflation could go. And a monetarist will tell you, as money supply grows, you can permit inflation to grow alongside money. But I think we are going to get inflation under control, optimistically, only because of technology. I think technology is making us so more efficient. And now you've got a government, or at least a government that's going to show up next week, that seems to move from the most inefficient sector, the public sector, to the most efficient sector, the private sector. So as efficiency grows, I mean, after all, what is inflation but simply a measure of efficiency or inefficiency. You got two governments that have the same amount of resources. Okay, just create that thought experiment for a minute. You got two governments that have identical resources. They have the same labor supply, the same ports, the same natural resources. Everything's the same. And one produces 1 million widgets and the other produces 2 million widgets. Well, the one that produces 1 million widgets is a lot less efficient than the other one. So, and you measure that as a measure of inflation. Inflation. 1 million widgets now cost what 2 million widgets would cost in the other government. So inflation measures inefficiency, and we have a guy at the helm who's all about efficiency.
Yeah.
So I do think we're going to get a handle on that.
Yeah,
Not
I
today,
would agree
but
with you.
next week. Yeah.
I would agree with you, Tim. I think that definitely, I think it's already under control, honestly. I think it's moving tenths of a point one way or another, but I think generally it is in control and it will get better in control. But I do think that the undercut of what's going to happen down the road, 2029, I keep bringing that up, is the 100-year anniversary to 1929. I'm very worried beyond there that, inflation could become a problem.
Well, I think until we get these deficits under control, that's the biggest fear. Is that we
And when you
borrowing
talk about deficits, if the United States is going to become more efficient, as Tim's alluding to, what about the rest of the world? They're going to clearly be behind the curve of the United States. I mean, Europe is now talking about exploding or at least going down the path of allowing their deficits. At least if you look at France and Italy, that and Germany wants to move in that direction to allow larger deficits. The UK is going to tackle this problem head on real quickly here, and I think theirs is going to explode too. So debt is going to become probably the next crisis in the world, but probably not for 4 to 5 to maybe more years.
They're going to undergo the same political changes that we just went through.
Yeah,
I
I
think
agree.
the world is moving right.
Yes.
Yeah.
Well, guys, I think we touched on a few things that I found very interesting and some thought-provoking comments. And why don't we leave it here and pick it up again sometime in the future? Steve, thanks very much for coming on.
Thanks, Tim. Thanks, Fred.
Yeah.
Really enjoy getting on with you guys and talking. It's great.
All right, we will do this again soon. Thanks for watching.